Hi, this is Kirk with Forex Strategies and Secrets, and we're going to be talking about the foundation for 4 successful trading strategies. Now, there are a lot of many trading strategies, but we're going to be talking about 4 specifically. So everything we're going to show you today, you can learn. You can learn one of these strategies if it fits your personalities. What you need to be aware of is, in the Forex market, to be successful, you need knowledge. Now, that's not just any knowledge. You need correct knowledge. You can get all kinds of knowledge, but a lot of it is just wandering. There's no system. It's just a little thing that they look at. So you need to be aware of, make sure you have a system or correct knowledge. You need tools. Those are your platforms and your indicators. And how do you get experience in a short amount of time? Well, we'll touch on that a little bit, but we have other webinars that show you how to get experience in a short period of time. So the things that most people would like to be able to do is make pips daily, keep those pips, and repeat the process. So you just know what you're going to look for. The thing that many people can do is they can make pips, but they lose them. And then they can't repeat it on a regular basis. So they're up and down or going down all the time. So we're going to share with you a trading system that will work on many different trading styles. And you'll see examples of the 4 specific styles we'll be talking about. And they have a foundation in the one trading system. So the style is not that critical, it's the system. I'm going to list here a few of the trading styles, and maybe some of these are styles that you guys would be using or like to use. Trading the trend, or doing the breakout strategy, trading with the direction of the momentum of the market, trading with patterns, doing long-term trading, that's a style, or short-term trading. Many people can do short-term trading, and there are those that do scalping. That's even a different than short-term. Does one or more of these styles feel like it might work for you? So think about how your trading is, or if you're new to trading, would one of these things appeal to you right off the start with? So first of all, let's talk about strategy 1. We used to call it strategy 1. This is a short-term strategy. Now, consistent trading is the highlight of this approach. To do short-term, you need to be very consistent, do the same thing over and over again. And this system can get a 90% win-loss ratio. Now, does that even appeal to you to be able to win that much of the time? You win 9 times out of 10. Now, at first glance, you think this strategy is trading the smaller time frames. But once you see how the strategy works, you'll find out that it is trading the direction of the trend of the larger time frame. But the timing, the entries, is happening on the smaller time frames. For this strategy to work, you need to follow a trading plan. You can't just be sporadic at this one. This doesn't have much room for leniency. You have to do the same thing on every trade. You have to be consistent. You have to have patience, discipline, and focus. Patience, waiting for that proper setup. Discipline to not be overtrade the account or take it for granted or walk away, and you have to discipline, stay right there, and you focus on what you're doing. Then a large win-loss ratio is possible if you follow this program. So here's an example of what it would be like. On the left, we see a 4-hour chart, and we have a white vertical line. And on this line, it's saying that's the direction of the trade. And the 1-hour chart says that is the direction also. It agrees. So you got 2 confirming time frames agreeing. Then you have over here an entry point and an exit point. Now there could be an aggressive point if you wanted to get in here, but this is the conservative. If you do this consistently, then that's the safest place to be trading, is right in there. And that's where you can consistently make pips on a smaller time frame, but you're trading in the direction of a trend. So now we're going to be talking about a strategy 2. This would be a long-term strategy. Have you ever wondered how to make between 500 and 1,000 pips a week? Well, that is possible. We're going to share with you a long-term strategy how you can make as many pips in a week as most professional traders make in a month. Now, here's the strategy. It's very simple, but here's the key. You have to be using the day and the 4-hour time frames. on this particular strategy. This is only just showing one time frame, but it's what happens is you notice the momentum is going shorter, the price is going longer, and right after that, that's called divergence. That's a heads up. That says, okay, the market's probably going to be taking a change of direction. Now, as soon as it hits this first swing low area, that's your entry signal. And you put your stop at the swing high as it was coming up the other side. And you put your take profit at the swing high over here as it was going up. And so there's your entry and exit signals. Now, this particular strategy has some pluses and some negatives. The pluses are you can make a lot of pips. The negative is if you don't time it right, you'll have a big drawdown before you start making those big pips. And so you have to trade with smaller lot sizes. And so what that means is that you're making a lot of pips, but you're not necessarily making a lot of money because your account can't withstand large drawdowns and be able to stay open to trade again. If you have your stop set too close, then you're going to lose money. So this one, if you can time it right and learn how to time it right, it's not if you can. If you learn how to time it right, then you're not going to have the drawdowns. And that's the key to this one. That's where it can make you or break you because the people that use this type of strategy, they're going 200-300 pips against them on several trades. And then within 4 or 5 hours, 4 or 8 hours, they are making 500 or 600 pips. So they're down almost as much as they make if they don't time it right. Now, stage 3, strategy number 3 is talking about patterns. Now, chart patterns give you a point of reference to target your entries and your exits. Now, using different time frames, using support and resistance levels, along with the market momentum indicators. And when you start to recognize trading patterns, you will start to feel like you're in tune with the market. And your current style of trading will be enhanced. No matter which style you're using, long, short, momentum, trend, you need to follow the patterns. There's patterns that will tell you, give you heads up and help you define which direction you should be going. The corrective pattern, there's always a correction. After a big move, it starts to correct. And many times it's an ABC, is what it's called most often. It's one of the least risky patterns that you can trade. You'll find there's a reliable profit target, and it can be managed very easily. Once a chart pattern is recognized, entry points can be found by using momentum indicators and support and resistance levels. So using a couple of tools here. And then a profit target can be set, and you let the market tell you what it is going to do. You don't try and outguess it. It'll tell you by that pattern what the high probability of what it could be doing. The same charts patterns can be found on small as well as large time frames. Now, the patterns you can use the smaller time frames are going to be sitting in front of it, but you can use the larger time frames and use that other method. If you use the pattern right, that's a good way to help you time the entry to make those large number of pips. Now, have you ever seen anything like this, the one off to the left, where the market moves and it retraces, and then it moves again? So I'm going to give you a couple of terms here. Impulsive and corrective. This becomes an impulsive move. This is a corrective. This is an impulsive move. So you want to be trading the impulsive moves. Over here, impulsive, corrective, impulsive, corrective, impulsive, then it goes into a corrective. So the big part of the move happened, and then it kind of starts to fall off and to try to break a resistance level if it can. If not, then it'll turn and come back. But you want to learn how to recognize the patterns, recognize the impulsive moves. The safest move right here is the biggest move, and that is the case in many instances. More often than not, the impulsive move is the safest move, and it's the most profitable move. I'm going to give you a hint. See this indicator right here? It's telling you when it's in an impulsive and when it's in a corrective move. If it's blue and above, notice that blue up here. That's an impulsive move. Red and above, that's a corrective move. Then it goes into a smaller impulsive move. You don't know how big they're going to be, but if you're trading that direction, you're not going to lose very much if you lose at all. Go back over here on the left. Impulsive move right here. It's red and below. Notice a nice big impulsive move. If you're trading in the direction of the impulsive moves in patterns, each of the two strategies we've talked about before, the short-term strategy and the long-term strategy, are trading with patterns. Whether you realize it or not, you're probably trading with patterns if you haven't already been aware of that. So the strategy number 4 is short-term trading, but large lot sizes. That's a strategy. This strategy, multiple standard lots are traded on each move. Now, you know, standard lots, we're not trading one mini lot. We're trading possibly 10 standard lots per trade. You must be consistent on every trade when you're taking large lot sizes. Now, the consistency falls in line again, and the patterns falls in line again. You want to always use a stop loss, and you take what the market is offering and don't expect to get what you want. So that's with any trading. If you try to always get what you want, you will only win part of the time. You'll win less frequently than if you try and trade with what the market's willing to give you. So here's an example. Notice patterns again. Now this is a larger time frame. So you can start seeing a pattern up here. It's giving kind of the direction, and you start seeing it almost coming into an impulsive move right here. Impulsive, that's a little bit of a correction, another impulsive. Now you go to the smaller time frame. Impulsive up here. You can see the rest of the chart. You can see this was an impulsive move. And right here would be the area you'd be trading. You need to consistently, in this case, the trader uses the 1 hour and the 15 minute. Finds the direction of the 1 hour, trades the 15 minute, but he's trading 10 to 30 standard lots at a time. That's $100 to $300 every time it ticks up or down. But you can make a lot of money. Now that's the key. He doesn't make that many pips, but he's making a lot of money because he's very precise. And that's what you can do also, is be precise. Learn how to be consistent, and then increase your lot size. And we have other webinars on lot sizes, but you can actually make more money by increasing your lot size rather than trying to increase the number of pips that you would make on a trade. Be consistent in the number of pips. If 10's all you can scrape out a day net, that's fine. Increase your lot size, you still make some good money. But what if you get better and you're able to trade 20, 30 pips a day? That's not a lot of pips, but you start increasing the lot size, you can start increasing your account by 20, 30% per month, if not more, by increasing the lot size rather than going for a large number of pips. You have to be consistent. You have to be accurate. You have to be aware of what you're doing. Now, do you see anything in common between these 4 strategies? We kind of talked about that in the beginning. They all use the same trading system. When you see the charts, they all looked exactly the same, but they were trading in a different way and different strategies. And the trading system is called the nth degree. Now, some of you have that. Some of you have heard of it, but it is really extremely powerful. Now let's review what we've learned so far. We're going to go over 15, we call them secrets, and why we call them secrets is because they're right in the open, and that's why people don't see them, because they're right there. And all these 4 strategies require the use of these secrets. They have to learn how to recognize a trend. A trend is still recognizing some type of a pattern. Learn how to recognize when the trend is changing directions. Now, there's some indicators where tells you the trend is changing directions, and then there's other situations where it looks like it's changing directions, but it's going to continue on. So you need to learn how to recognize when it's actually going to trade, change directions, and when it's just hesitating before it continues for a little longer in that direction. Learn how to identify high probability trades when everything lines up. Learn how and when to exit trades. Now, you need to set specific exit. Don't try and capture the whole move, like the tops and the bottoms. Just take a chunk out of the middle. Learn which time frames to trade and when to trade them. Okay, if you want to go for a lot of pips, then you can go for the day and the 4 hour. You can still make a lot of pips trading the 4 hour and 1 hour. You're going to make less pips trading the 15 and 5 minute time frames, but that's the time frame you need to know which time frames to use for what strategy you're doing. Learn how to trade more than one or two currency pairs at a time. Have 3 or 4 currency pairs you trade. These people may only trade 2 currency pairs at a time, but they're trying to figure out which 2 currency pairs to trade. So they trade what's moving at the time. That's one thing that they all were looking for. Learn when the market has the highest probability of a good move. Learn how to trade while working a full-time job. This one you need to use your larger time frames. You need to set the take profit and the stop losses and let it do its thing. You may not be able to take out the 60 pips that would be in a trend. You might get 20 or 30. The point is you won and you were trading while you were working a full-time job. Learn how to recognize chart patterns. That goes for anything you're doing, any trading, any style, any strategy, any course. You need to recognize patterns. Learn how to control your emotions. Can you imagine trading $100 or $300 every time it goes up a pip or down a pip? It goes in your favor or against you. Well, that could be $100, $300 every tick, tick, tick. You're $900 down or you're $900 up. You need to learn to control your emotions when those things are happening. That is a process. You're not going to get there in your first month of trading, being able to control your emotions. You need to take thousands of trades, and you need to be able to recognize patterns and not even be concerned if you lose a lot of money, as long as it's a small percentage of your account. It could be large dollars, but a small percentage of your account. Control your emotions. Focus and be consistent. I think that you need to be aware of focusing is long-term, short-term, scalping. No matter what you're doing, you need to focus on what you're doing and just do the same thing over and over again. Learn how to stop allowing the losing trades to run too far. Figure out some averages. If you always set a set stop loss, that's okay. See if that's too close or too far away. Eventually you'll find something that kind of works for you, and then don't let it go past there. Get your emotions out of the way. Say, oh, my stop was set at 20 pips. I lost 20 pips. So what? You didn't lose your account. So don't let it run. Well, it's going to come back. I think I'll keep on moving it out. It'll come back. I'll move it out. Well, most of the time you move it out so far you get so emotional you close the trade and take a big loss. So learn to be consistent in your stops and don't let them run too far. It's better to take a couple of small losses at 20 pips each or 5 pips each, and then when you get the big runs of 30 or 40 pips, you're still positive. Learn how to allow your winning trades to run to completion. A lot of us get excited and we forget what we're looking for as far as the time frames we're managing on, and we close the trade too soon. Learn how to keep proper journals and records. They don't have to be elaborate. Very simple, but you need to follow up so you know what you've done and find out whether you're consistent or not. That information is in our course material in the nth degree. Then practice the simulated trading. Okay, that's how you get a lot of experience in a short period of time. And if you go to our Jumpstart course, that's a free strategy. We teach you and talk to you about simulated trading. Learn how to get experience. And then you can apply that to our strategy, the nth degree, or any other strategy or course material. You can do simulated trading. and get familiar with that information quickly. It doesn't have to take forever. You have to take more than one trade a day, more than one trade a week. You need to take multiple trades. The more trades you can take, the better off you're going to be. If you can take 4 or 5 trades a day, you're going to learn more than the guy that takes 4 or 5 trades a month. Now, the N3 system contains all of these secrets, but you have to apply them. It's one thing to know about them, but then you have to do them. So the N3 has everything that you'll need to become a successful full-time trader. Why can we say that? Because we have many, many students that are successful traders, making full-time jobs or full-time living, or if they're not making it for a full-time living, they're making some good money. But it took them a while. They had to study and work at it. And we've come up with ways to help you to learn more quickly. So what are we offering here today? We're offering the N3 trading system. And we have 21 Trading Lab webinars. Now these are 20 to 30 minutes long, maybe even 40 minutes on some of them. They're answers to questions that people had over the course of time. And so you get the course material plus these webinars to answer questions specifically and spend a lot of time on one question. We have some acceleration coaching webinars to show you how to get up to speed quickly, to do it quickly. Don't drag it out for years. And be consistent. A few hours, at least an hour a day in the beginning of learning. You might be trading some also. If you want to do trading, you got to put some time into it. Some people think that they can come in and spend a half an hour and make some money and never have to look at the charts again until the next day. Well, if you're able to do that, that's the exception. You need to spend a little more time, but it has to be consistent, but it doesn't have to be more than about 10 hours a week is like tops. You could do it in 5 hours a week, but it has to be a consistent, and you have to keep up with the same routine all the time. So we can give you all this, the course material, for $497. If you have it, great. Learn how to use it. Spend some time with it. Come and attend sessions with us, and you can learn how to get the benefit of the course material. So here's a link. It's you click on this link, it'll take you there, and you can go to the course material. It's called tinyurl.com/Z2PST6N. Now we'll come back to this. You can you're going to write this down and then put it into a browser, and then you'll get the form. So if you have questions, you can contact Jed and I. The best way is through email. If you have a Skype address, or if you're in the United States, a phone number would work. We can talk to you. We're not going to coach you. We'll answer a few questions, but we charge for our coaching. We'll answer questions about the course, but we're not going to teach you how to use the course because you call up and ask a question. Sometimes I give more information away than I should. But you can find this on our website at forexstrategiesecrets.com, the phone number and our email address. I'm going to leave it right here.